Hello, welcome everyone, and happy Memorial Days. And number one, let me salute all of our friends in the service. More importantly, for the families that have lost loved ones through the years in the line of duty, our thoughts and prayers and gratitude are with you. Right now, we've got a very interesting market dynamic, especially in crude oil. So what you see in front of you are three different strategies. One we've just added to the live trading room, our algo room that is, and that's here, the euro currency. This market had historically, and by the way, Casey says, hello everyone. This is Puppy Sita, aka Puppy Sita, our little Casey, the company mascot. Casey doesn't understand when I talk on the microphone what's going on in the market. She doesn't really understand that when I talk to you guys on YouTube, I'm not talking to her. The other day, you may have noticed that while I was chatting and giving you guys some market insights, she was chewing the end of my desk. She was jealous. So I have been chosen as her number one, her favorite human being. I am her shadow, or she shadows me, shall I say. But we cannot leave her alone at home at all, and she needs constant attention. She's actually our little good luck charm. So with that said, let's get into today's action and what I see going ahead for the weekend. Today, the euro currency, I've just added back in the strategy here, the performance on this. Let's take a look. Keep in mind, the ATR, the average true range on the euro currency is 40 points. And what we do is we have our strategies run in this trading room that do not run all night long. They only run for a certain time period. Let's take a look at the strategies that I've set up with you guys here. First off, max trade loss is $250 on a euro currency. That's what it optimized out. $800 max profit because it's a 40-point trading range. We only take trades between 8:55 a.m. maxed out at optimized out, at 8:55 to 1600. Look at subtract minutes though. Subtract 265 from 1600. It's 265 minutes. And I'll tell you, it only trades a very short period of time. What does the performance graph look like? It's profitable. It's not steady. It still makes money, grinds out. But the problem with this is that year to date, and I'm sure everyone can come up with a different strategy that makes more money, and I know that. But let's face facts. This only trades like 3 hours a day and only trades 2 lots. And in a market that is down 2.81%, buy and hold rate is down 2.81%. This has return on account of 370%. So it's not bad. Its risk-reward ratio is got a different setting. Its profit factor, obviously, it makes more money on the short side than it does the long side. It makes no money on the long side because the main trend of this market all year has been down. So it's kind of like a pain in the neck on long positions. 58% of the trades are profitable, but here, this is a staggering number. 73% of the shorts are profitable. So why do I ever want to entertain longs with this strategy? Well, because we may be coming out of, and that's why I've scrapped this one off the shelf and put it back into our live trading room, because I think it's time that we're going to see a flip or a switch in the euro currency. So therefore, we're back in. Now, this is the crude oil, the one I've been sharing with you for multiple days. And one of the things that I wanted to point out is this. Let's take a look. The market today, from our point of view, looking at this volume indicator, this is the person volume indicator, shows a very strong bullish convergence. This is an important area of energy, this level right here. It's where the systems that were short covered their short, and the systems went long and made money yesterday. Today, we come into the room, and we go all the way up here to the pivot resistance. That's what this big, tall, pink line is. It's pivot resistance using the person's pivot indicator. So for those on TradeStation, you can get my person's pivot daily indicator. It's free. This would be showing up on your screen. Some people download it. They don't know what to do with it. I implore you to go to our website, go get free instructional videos, or maybe go to Amazon.com and buy my book for, I don't know what it is, $60, $70, or attend some of our multitude of webinars that we've given for customer appreciation educational events. But in the meantime, Persons Pivots is a dynamic tool. We use it on a daily basis in our live trading room to help determine value in the market, spots to do business. Now, with that said, spot to do business. It's not just about price or price-based indicators. It's also about maybe condition of trends of the market. In this case, today, we got a short position that was under the condition of weakening volume. So the downside of the volume supported a good short. It took profits on half the position at the profit target, and it trailed a stop. You can see the red dot. That's actually a line. That was the trailing stop function. But here's what's really interesting. The market found value just almost, and if I get rid of these lines, here's the point that you should be taking notes on. The market found value and stopped dead at a dime at about where yesterday's buying pressure came into the market. So the market came back and now has formed what we would call a potential double bottom. It successfully retested that yesterday's area where energy came in, buyers discovered that they were going to cover their shorts, and buyers stepped into the market. System has gone long. It got out of, again, half the profit target right there. It got out on a trailing stop basis, and right now it just jumped right back into a quick scalp. It's up 21 cents. That's $210 per contract on this algo optimizer. So what's the point that I'm making? We got a little dead cat bounce, a Memorial Day bounce. I would say that there will be more of a recovery into next week when and once we start to see multiple closes greater than what is now being established as overhead resistance. This is where people made money. People made money here by covering shorts and going long. People made money here by selling short. So again, if the market keeps going and testing and probing where people have generated trades until those trades are proven wrong, that spot will act as resistance. So that's number one. We will look for breakouts above the pivot zone for next week. So keep that in mind. And I think for right now, what you walk away with is, well, it's Memorial Day. I'm not going to establish any more new trades at 2:43 Eastern Standard Time. And maybe I should let this system run its course on this trade, but no new trades after maybe 3 o'clock would be a smart thing to do, or manually override this trade. Anyway, moving forward, I think that as we get into looking at the E-mini S&Ps, here's our strategy that we have up in our live trading room. This, again, is a system that only takes trades during the U.S. Open outcry, and it doesn't take trades after a specific period of time in the afternoon either. And it will get out of any trade before Globex close. So we're not holding positions. But may I point out that anyone who acquires the Algo 17 program, if you want to develop, now that we have an increase in volatility, the ATR on the E-mini S&Ps, let's take a look at that real quick. All right, I just flipped back over to my radar screen here. Here's the E-mini S&Ps. This is your ATR right here. That is a short-term period ATR today. It's Friday. It's the day of Memorial Day weekend. We only have a 22.75 point handle range today. We went from about a 28-point ATR to a 44-point ATR. Volatility of trading ranges have expanded. So, traders, you need to be aware of that and watch for that. A lot of things we develop out of ATR. Trading systems. Some people develop a chandelier trading trailing stop tool. A chandelier trading stop is based off ATR concept. So we have to do one thing when we have trading systems is maintain the trading system for your profit, loss, max profit, holding periods when you see a contraction in ATR and an expansion in ATR. So for right now, the market, are we going to get a dead cat bounce out of the ES? Well, today it's positive. It's off it's off the lows, shall we say, but we're pretty much right smack in the middle of the daily range, and it's a very light range on top of that. So moving forward, I don't know if we're going to see a lot of great activity. My personal feeling is the risk is not to the downside this weekend. The risk is to the upside. President Trump went over to Japan. The media is not being, well, let's just say the media is being the media. They're not going to put out a solid piece of information whether he's done something right, except for they'll only put out information if he's done something wrong. So at this point, I don't know if we can believe as traders headline news, because you got to understand the media's job is to make him look bad. And for us as traders, we're going to be subjected to that news influencing hitting the market. And short-term traders are going to get maybe their heads beat in. So we're going to have to rely on technical analysis and also make sure that in this kind of environment that we're in, be able to take quick profits in the market. So that's one of the things that I wanted to point out to you guys that we got to be able to take some quick profits in the market. There's been a lot of cross-current things happening. Sell-off in the Russell. This chart here is TNA. Cross-currents, been kind of a conflicting situation with volatility. The VXX, a great model. In fact, it's really confusing. If you look at where the VXX is and look at the last 2 weeks, look where the range is in the volatility. We're right in the middle. We're not at the highs and we're not at the lows. That's really interesting because one of the things that happens is when the stock market goes down, the volatility goes up. And you would think that if we are getting ready for that cusp of breakdown, especially over the weekend, the volatility or the VXX would be a lot higher right now. People taking protection from volatility, but traders aren't. So it leads me to suspect that the real in the money know people have the idea that perhaps maybe the risk of the market is being short the market into the weekend, and maybe there could be some good news that comes out of this Memorial Day trip that President Trump has taken to Japan. If that's the case, maybe the volatility traders got it right. So I wanted to say that we could be getting kind of a precursor taste by looking at the volatility rather than looking at the overall S&P market. So as we get into Sunday night, remember, in the Memorial Day weekend, it is a holiday. The market's closed on Monday, but Globex is open. And another thing that I want to make mention is there's a new kid in town as far as trading is concerned. It's the micro E-mini S&Ps. And if you get an algo system strategy on a higher time frame and you say, I like that trade, but the risk might be too great. You know, algo traders, you can go MESM19, all right? That is the symbol for the micro E-mini S&P. Now, I didn't alter. You notice that the trade signals here, you may not want to develop a signal strategy up on the micro E-mini because it's not as fluid as the E-mini futures, but it does trade side by side. But this would be maybe a good market to trade. And I just wanted to compare without touching the strategies, without altering my system inputs, holding periods, risk, reward, trailing stop functions, everything that Algo 17 allows me to trade or to maintain. I didn't want to change any of that. I just wanted to change the symbol. But notice that it still had some pretty decent trades in this 5-minute basis. Now, the problem is every tick is, again, with this, it's 1/5 the contract size. So every, if you think about it, you're a 10-point move in this micro E-mini is $50. So you're going to need a big move to occur in order to make some decent money on this. So what I would say is this is better for maybe overnight swing trading and maybe over weekend trading if you have a really good trade idea so you won't get smacked in the face with massive losses. Or it's also another product that you can use to hedge against E-mini S&Ps overnight. So if you had 10 contracts of E-mini S&Ps, well, you'd sell one. You can't sell one E-mini S&P against an E-mini S&P. That would reduce your net position. But you can sell micros against it. Exchange might not like it, but that doesn't mean you can't protect yourself. And I'm here to help you protect yourself. Spreading off risk is another professional trader's tool that we use. Like, for example, if we're long S&Ps, we sell the NASDAQ against it or sell the Dow against it. And that's one way to, A, reduce our margin, and B, reduce maybe adverse market exposure that we can kind of live through. And so for this weekend and Memorial Day, I'm suspecting that with where the market is right now, we're still stuck in a range, and we could see liftoff. The surprise could be to the upside. I'm not saying to do a trade right now, but down the road, watch this E-micro contract. It's pretty decent. In the meantime, ESM19, let me change back to our main page E-mini S&P program. There we go. And we'll leave it there. As you can see, definite distinct differences in trading results from the mini contract and the micro. Anyway, that's what I wanted to say. We might be seeing some surprise upside, relative strength. Leaving you with this, we did get a whale of an exodus out of energy, and that flux of exodus continues today. Look at my board here. OIH still down 1%. XOP down 0.4%. So we've seen that rotation out of energy. Where did the money go? Quite frankly, we've got healthcare. Look at the bottom, performing not by percent change, but by relative strength performance. So utilities, they're down 8 cents, the XLU, but the relative strength outperforming utilities on a tear to the upside. Consumer staples, that's bright blue. This is the column we're looking at. This is the person market catcher. Consumer staples outperforming. So when you see bright blue, what you're looking at is this indicator, bright blue. It's the relative strength tool. It helps us to identify if a market is outperforming, which would be bright blue, underperforming, which would be dark blue, weakening, which is red, which if long, red bad, and then improving, which is the fuchsia. So there's 4 stages that this helps us to identify the market condition. Yes, this tool is the one that's the same, is called PMC on Thinkorswim platform. It's under my name because I created it, John Person. You can see the indicator. PPS for the buy and the sell arrows, Person's pivots, and once again, the PMC indicator. All right, so what is the other segment of the market that's strong? Ironically, it's biotech. We just don't have a lift up right now in drug and healthcare. So I think we are seeing a slight rotation into some of the healthcare and the drug stocks. You want to be focused on this in the next coming weeks because it is the strongest seasonal tendency for drug and healthcare stocks between now and July. And biotech tends to see increases in this time period. So be watchful to see if the relative strength kind of lures some of the institutional traders into this segment of the market. With that said, have a great Memorial Day weekend. And once again, our salute, and Casey says thank you to all the veterans out there. Have a great Memorial Day weekend, everyone.